All right, it is Friday, March 8th, last day of the week. So we'll get some opportunity to take a peek at the weekly bar, see if we're going to get any change. But as we do always, we want to start on the monthly bar that helps us maintain this perspective. Another thing that I've been kind of focused on lately or kind of developing into is taking a peek at this OPEX bar, which is sometimes similar to the monthly bar. Like if we were to pull them up side by side, I'll show you here the monthly compared to the OPEX. Um, so you can see this is the October bar in OPEX on the left side, and the November bar in the monthly. So a little bit different, but you can see OPEX right here just pretty much straight it up. Kind of got this doji bar, a little bit more pullback in OPEX than the monthly. And then you can see on this month, right, the close was a lot higher on the monthly compared to the OPEX close. So still very similar, but just something else to kind of look at. The market is, very dictated by options lately, especially lately, as a lot of people are basically trying to use leverage in order to kind of camouflage some of their, maybe the mistakes they're making, or whatever they seem to be doing here. Why is this like this? So there's just a lot of leverage kind of piling around it, and so it makes sense to look at the options expiration bars, as options expiration tends to be that forcing mechanism for people that have to make decisions, right? If you're trading a bunch of options, it's not like holding a stock or holding a future where, well, it's certain futures depending upon, futures expire. So if you're, a long oil future contract that's in the money, you either have to close out for cash or take delivery, right? So, but comparative to stock, which a lot of these options are on, you can really just hold a stock forever, right? If you own a share of Apple, you can hold it till it goes to 200 or hold it till it goes to zero. Whereas when you hold an option, it's based off of a specific expiration date. So, it might expire at the end of this week, it might expire at the end of this month, or it might expire in 2025, but there is an expiration date on it. And so a lot of times these closing or these options expiration dates become forcing points for larger businesses or larger traders to be executing trades, and it just gives us some opportunity, or a little bit more perspective into the bigger picture, right? I'm kind of pairing this with the COT report, and it's actually been pretty beneficial, and it's kind of leading me to believe that that we might want to take a peek at silver here. I don't know if Tobias is here yet, but him and I were talking about gold. But if we look at silver on the OPEX chart, you can see, and I'd have to put the time frame a little bit more. But you can see silver got that 2020. This is a COVID low 11, went all the way up to 30, and has since then just been kind of balancing. It's not your traditional Fibonacci. I have mine's on like every quarter, but you can see where we've just been trading sideways since November 2022, kind of right along this 50% line. So I'm thinking if we get a close here above this, well, it looks like a green close, really a close above the 23.47.5, then we can probably look to get long some silver, longer term play. I still haven't figured out if I want to get long the futures or if I want to get long some derivatives, but just something I'm kind of thinking about. So if anyone's else got any opinions on that, or looked into it, shoot me a message. But yes, once we jump back to the ES, we're on the monthly. Still one time framing higher. We're still above the previous month's high, which was 51.23 quarter. Previous month's close, 51.0375. So those are kind of our two levels to pay attention to. current month's open 5105 quarter, so we opened up just marginally above the previous high, and you can see we're developing this +4, only 9 days in or 8 days in. But you know, still just kind of we kind of see where we're at, a little bit above that previous high. So staying above that previous high really tells us let's not try to call the top yet. Let's go ahead and go with the trend, right? Switching over to the weekly, you can see the weekly is not going to be a +4 because of the cessation of one time framing. Very marginally, again, we kind of have this same look like we had back in February, but we did put in an outside bar. You can see the all-time high yesterday set 51.70.5. Remember that JP Morgan collar we talked about a few weeks ago? They rolled it up to 5,200, and I'm even seeing some flashes of the 5,250. So we definitely want to be kind of paying attention to that, those kind of levels on the upside there. There is basically they're selling calls up above that. So as long as they hold the market up, they can really kind of dump inventory is kind of how it seems. Now, depending upon the close, right, today, like right now we're trading at 76, so we're actually at a new all-time high. But depending upon the close today, should we close back below this previous week's high, that would give us more of a 2-week balance type of look with some excess on the high. So we'd be looking more for balance rules. With this look here, we're still kind of getting this breakout. The weekly was kind of balancing until yesterday, and we'll see it a little bit more on the daily. We're kind of breaking out of that balance. Now switching over to the daily, you can really kind of see it, right? The weekly, even though it was like a 10-day balance, it's kind of a sloppy looking balance. But this is the great thing about the market is you really are forced to use your brain a little bit, right? Just think about it. Like a lot of people are like, well, this isn't balanced, this is trend, blah, you know, whatever. Well, for the most part, the market's just trading sideways. Yeah, there's a pretty decent range, 48.50. You know, you're about 130 point range here, but in reality, the market's just kind of balancing. So if you can understand that, same thing here, right? The market's just kind of balancing with this big bar that comes down and gives us a test of the balance area low, and it's a -4 day, so we know we want to play against that settle. Well, it gives us, I mean, we had the perfect opportunity here to get long it, and this is something that we've been talking about, and that I'm kind of showing a new developing strategy with the market profile and with value for an intraday. But when we get 2 momentum bars in a row, that next pullback day oftentimes is a buying opportunity. And you can really kind of see that here, especially when the market's trending, right? You get 2 green bars here, and we get this pullback day. This is the first pullback day, becomes a buying opportunity, right? Then we get 2 more green days in a row. So sensing some momentum coming in, get this red bar. It really does become a pullback day. The next day opens lower, does trade higher. We get this big gap. 2 green bars in a row, right? Doesn't trade lower than that bar. Another 2 green bars in a row. Market trades to an all-time high, right? So you really are, if you are paying attention and you're really kind of understanding the process of value and supply and demand, which is, you know, the auction market theory, and something they should be, you know, keenly focused on if you are trying to develop as a trader, understanding the market profile and kind of the science behind it, or the art behind it. This can be very beneficial for you on these types of days, right? And it can really kind of help you maintain that perspective and not get caught like a lot of other retail traders who seem to be you know, every time there's a red day, they're like, oh, this is it, we're going down to 0, right? And so it just really helps you stay on the right side. Now, yesterday, +4 day, right? Break from balance, little test above the balance high. So we really want to watch this high here. That's that 51.57.5. That's that previous all-time high. I think acceptance underneath of that level probably gets us maybe acceptance back into this balance. And you can see a little equilibrium starting to form here. So let's go ahead and move this bad boy up here, and we'll toss it right there. Yeah, that's good. So 51.18 looks like a pretty decent equilibrium level. So if we do get a pullback, maybe that will be our kind of look, our first look, as far as a break back inside balance and maybe a rejection, because this looks like maybe a breakout fail, retest the balance, and now we're getting another breakout. So to me, that balance area high, and I think I have it marked at 51.23 on my profile. So 51.18 to 51.23 is, basically the same thing to me. Now switching over here to the profiles, let me get the settle from yesterday real quick. We have 51.61.75. Okay. So a little review of yesterday, right? I mean, there was just no reason to short. You could see value from the previous day, obviously lower off the chart. We opened up on a gap, took care of some old business right away. Mechanical buyers stepped in. That's that pullback low. And then for the most part, just grinded higher for the rest of the day. So not really the easiest day to trade, but if you were staying on the long side of the market, you probably were a winner. And you should have been staying on the long side of the market. If you had I don't want to say sucky, but if you had a stressful day yesterday, most likely you were trying to take breakouts if you were on the long side, or you were really trying to short the highs every time it made a high, or you were shorting against this 51.57.75, which would have been a decent mistake. But if you'd have been here in the room with us, you wouldn't have been shorting because, like we said, there was no reason to short yesterday. Maybe you caught that short off the poor high, really still just, luck. There was nothing really telling us that it was going to liquidate. We did get a liquidation. M period checked back. We left the poor high. And now once again, we've got overnight inventory pretty much neutral, but we have a all-time high made in the Globex session, which typically isn't a good sign if you are a bear. Most likely this level will get revisited. Now when is up for debate, who knows, but just most likely the odds favor of retest of this high. So what we want to do is go ahead and mark this level. That way when it comes up during the trading session, we'll know exactly where it's at. And then also we want to mark this level here, and it's a mechanical level. So really what we're kind of assuming is the buyers from yesterday were short time frame buyers. They'd love to get the market higher, hold the market higher to get these prices to move higher. But should we get back below this mechanical level, then we may get a deeper liquidation, and that's where I'm talking down to the 23 to 18 level. So that's kind of what we're looking with today, or looking at today. So we can see where value's at from the previous day. We're opening up towards the high of that. Remember yesterday we had a +4, so we really don't want to see the market get much below the settle. So what I'd like to see is a little bit of pullback into value and see buyers show up, and then you're going to be targeting that overnight high right away. Now what you'd like to see is break and hold of the overnight high for confirmation to trade higher. Break and hold overnight high for continuation. All right. Now to the low side, really, below the settle, there is higher chances for liquidation, but you really want to be patient. And for me, you got the weekly +4 here, so finishing below that, I think, causes some liquidation. So I think that's really where the short starts. And that's kind of what I'm looking for. I'm looking for how the market really kind of acts in this area here. If we start to pick up some tempo, like I said, I think there's good chance of liquidation, and I think that takes us down to this kind of balance high, or maybe this 18 level, some opportunity. Now you could expect some chop. We've got the previous day's high and yesterday's low very close to each other, so that's kind of another mechanical level. So I don't really expect it to hold, and that's why I'm thinking down to that 2350 is kind of the opportunity here. Now it is Friday, so maybe we don't get a lot. We did have some news today. Most likely, well, actually, the news took the market from dropped it to the low. Pop this open here. It dropped it to the low and then popped it to the high, and now you can see we are trading at the high. So maybe some more trapped shorts here in the market. So we definitely want to be a little bit careful of that. But for the most part, it's looking like it's going to be a play number 2 where we break the value area high, and we're going to be looking to take this thing higher, playing off of the settle as our level to stay above in order to get this continuation to the upside. We get our COT report today, so that'll be nice. We'll get to see a little bit of information on where people are positioning themselves. Professor O, what's up, man? But other than that, that's pretty much it. I won't be expecting too much today. A little bit of digestion. It seems like the overnight sessions this week have been the place to play, right? If we include the overnight sessions, you can see here last night 37-point range, night before 58, night before 37, small one there 25. But I mean, 3 overnight sessions in a row have been pretty volatile, and you can see we had a 58 range session, 36, 37. So we had that kind of outsized session, and now we're kind of getting back into the normal range. So there is decent chance that we really do just balance up here as well, as far as leading into the end of the day, Friday. So don't be too excited if this thing does catch a bid, gets above that overnight high, or can't break the overnight high, or it gets above and returns back in. Don't be afraid to just take some profit. There'll be some more opportunities in there, I'm sure. And if there's not, just be patient and wait for that market to get below yesterday's half back, and then we can start looking to fade it. And today I could kind of see an opportunity to trade both sides of the market, should you be patient enough and let the market set it up for you. Right? Remember, you don't got to go looking for the trade. Oftentimes the market will serve them up to you. It'll just be on you to return the serve. Other than that, you guys have a wonderful weekend. Make sure that you're managing risk and sticking to your trade plan, and I'll see you guys next week.